Okay. A very good afternoon to all. Thank you for your time today. We're here to discuss challenges in fundraising for early stage startups and how FundTQ can help startups to raise funds using technology. Thank you all for being here today. Before we begin the webinar, I would like to introduce our speakers. Today we have Professor Amitabh from IIT Kanpur. He is a professor of the Biological Sciences and Bioengineering Department of IIT Kanpur. He is also the current occupant of the Kent Chair for Entrepreneurship and Innovation. Professor Amitabh is associated with the Technology Business Incubator of IIT Kanpur since 2012. He was also instrumental in setting up the state-of-the-art bioincubator of IIT Kanpur. Since 2018, he's been the professor in charge of innovation and incubation at IIT Kanpur as well. Thank you for your time today. Moving on, we have Ms. Aanchal Malhotra. She's the founder and CEO of FundTQ, Asia's first digital funding assistance platform, which is highly insights driven and analytical. I'm sorry, I got cut off there. So we were talking about FundTQ. It helps startups close a fundraising or acquisition deal with ease and precision without any manual effort. Aanchal started her career in investment banking and has expertise in valuation and business structuring. She has worked with consulting firms like EY and Moody for the past 10 years. FundTQ offers valuation and idea validation software, which is used by existing and aspiring founders across IIT, IM, DCE, NSIT, NIT, BITS, ICAI, etc. She brought the innovative concept of InvestTQ, which was a virtual event for startups fundraising where startups pitched live in front of investors. It got an overwhelming response during COVID and attracted 60% success ratio in shortlisting. Aanchal is highly active in media and has organized esteemed events with organizations such as Startup India, EY, SAP, Fluid Ventures, Bharat Innovation Fund, etc. Now, thank you for being with here today, Archer. Now, I would like to request Professor Amitabh to start off with some of the challenges that he thinks that startups are facing today when it comes to fundraising, especially during the times of COVID.
I would flip it slightly. In fact, I would say that for an incubator like what is there at IIT Kanpur, where we start with idea stage companies, funding for the initial prototype development and the initial R&D has never been better. I can tell you that in a good incubator today, whether it is at IIT Kanpur or many of the other leading incubators, there is a plethora of government programs. Then there is now with the change in the rules, a lot of corporate partners with their corporate social responsibility funds, they have joined hands, and therefore, if it is a good company, depending on the sector, whether it is biosector or not, to raise funds anywhere between 25 to 30 lakhs to up to 1 crore, purely as grant, okay, no equity consideration whatsoever, is not at all difficult. The problem comes after this stage. Once the prototype is developed and now it is time to scale up, that's where the problem comes. And I will tell you from our vantage point, IIT Kanpur incubator traditionally has been one where we focus more on hardware product development. Like if you look at the nature of our companies, they make drugs, they make compostable plastics, they make battery, they make UAVs and robots and medical devices and agricultural implements and stuff like that. Um, if you look at the funding success stories that hit the newspapers in India, you will see primarily those are service sector companies, mostly in fintech, and nowadays few companies with applications of AI and ML, but mostly in the service sector. The attraction of this sector is that the growth of the companies is much faster as opposed to a traditional hardware company where the growth is slower. And I guess because of that, the venture capitalists and the angel investors, they are more tuned towards funding software based companies or app based companies than hardware based companies. Um, we are fortunate that we have certain private funding agencies that have taken a liking to our companies, and they're raising funds on a routine basis now. But it is still uh, not as simple as one would like to have. Like if you compare it with the other economies, like for example, U.S. economy or Israel economy, there these product companies are at least as preferred, if not more preferred, which is not the scene in India. Uh, there are many challenges of funding this genre of companies. One is the valuation, because valuation often is about the current businesses, the revenue, uh, etc. And for some, and these hardware companies, they are unlikely to be revenue making uh, until and unless they have substantial funding to actually scale up and manufacture in a large scale. Uh, Therefore, it becomes an egg and a chicken problem. Um, for some reason in the country, valuation of IP is still not a well appreciated concept. And hardware companies, they primarily have IPs. Okay. Uh, so that is a challenge that we have vis-a-vis the 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 funding partners per se. The other problem that you often see is the disconnect between the expectation of a startup vis-a-vis funding that they would like to raise and the offering from the funding partner. And sometimes the terms and conditions of the funding, as explained in the term sheet, is often quite one-sided, and uh, such IP-based companies hesitate to go with those kind of agreements. Uh, and we have many such examples in our ecosystem. So, uh, A good, it is not clear to me immediately that how do we bridge this gap, because on one hand, I'm sure all of you will agree, whoever is there in this room today, that when the pandemic hit us, nobody was looking for an app per se to survive from this deadly pathogen. They were looking for diagnostic kits, they were looking for masks, PPEs, ventilators, oxygen therapy devices, etc. And if you also look into the delivery, uh, I am authoring a book on this topic, and my research clearly showed that every requirement that the country had to manage, fight the pandemic, were actually satisfied by the startup ecosystem only. Okay? You will not be able to name a single product that came from the established companies. Like, I don't want to name names because that will not be appropriate. But I can name the products that came from the startup ecosystem. That is the first diagnostic kit uh, that came up from the startup ecosystem. Now, Feluda is making a lot of noise that came from IGIB, it's a research institute. Our own incubator developed and delivered the ventilators. Our incubator developed and delivered the Swasa mask that is being owned not only by the Prime Minister of India, but every third person I see on the street, I see is wearing a Swasa mask. India today is the second largest producer of PPEs. Okay, so you see the societal problems, the core crux problems, which are like on solution to which survival depends, is through these hardware products. Okay, apps and service sector is very important for the economy. I am not, belittling it by any stretch of imagination. But at the same time, it is important for us to remember that as a nation, as an ecosystem, we need to support the manufacturing segment. Else, our aspiration to be Atmanirbhar or self sufficient as an economy will remain a pipe dream. Um, I would like to hear from Anchalji and others that how this gap can possibly be bridged. Like, from my vantage point, see, I am an academic. I am absolutely enamored by what the startup companies can do and what they have done. Uh, but I would not say that I am an expert on funding. Okay, I only have second-hand information from the struggle that our companies go through. I therefore, based on what I hear from them, it appears that it is not just a liquidity problem, it is also a mindset problem. And the mindset problem of those who have the money to invest. Um, I do understand that if there is an option to grow my money fivefold, tenfold in 3 years, I would perhaps go for it. But at the same time, we need to definitely promote manufacturing in the country, and which cannot happen without very active participation of funding bodies, with particularly the private funding bodies. The government is certainly doing its bit. Nowadays, you can get very easy terms funding from the government up to the quantum of 3 crore rupees, uh, and sometimes even higher. But there is a limit to the government funding. You eventually need the private players to come in play. And I would definitely would like to hear more about it from Anchal ji. The other aspect is about our companies per se. I see some of them are in the room, that it is like, I am a professor as well, so I take exams of the students. If student writes an answer does not really which is not self-explanatory, it is not the job of the professor to figure out what the student wanted to mean and grade him or her that way. Similarly, when it comes to funding, the person on the other side of the table has the money. It is your job to convince him or her that why investing in you is the best possible option for him. That requires deep thinking, dissociating yourself from your innovation. Uh, all startup companies, they are technologically very good, so they often fall in love with their own technology. But your job is also to infect the other person about the excitement and possibilities with your technology, where sometimes we fall short. And that is an aspect that we need to pay uh, much more attention. Uh, I am like, if I have to prioritize among the qualities of an entrepreneur, making a very good pitch perhaps will not be among the top 3 in my list. But when you are trying to go out in the market to get money, unfortunately, your pitch has to be the absolutely top of the line. It has to be self-explanatory. It has to be simple. It has to be understood by an absolute lay person, because the person with the money is likely to be not an expert in your technological domain. So he or she is more interested in what it can do, how it can solve a problem, and therefore what is the business proposition, rather than understanding the nuts and bolts of your business. If he or she is interested, he will indicate that to you. So that is one aspect that us as an ecosystem enabler and members of the ecosystem, the incubator and the startup companies, we need to think through a little bit more carefully. Uh, but I'm hopeful the way situation has changed. Uh, it is looking brighter by the day. Uh, COVID per se, I would think that it had been a blessing in disguise for most of the companies. The companies that were supposed to peak in another year and a half's time, the desperation of COVID situation actually made them peak now. And they are doing fantastic business. They are raising a lot of fund, and that is very heartening to see that the resilience that they have, the ability to quickly turn around into a new vertical, or repurposing the same product for COVID, that agility that I saw, uh, boosted my confidence in the Indian startup ecosystem. Uh, and I am confident that if we can connect the other dots, particularly with solutions like what FundTQ has to offer, uh, we are looking at a bigger and better future for the entire ecosystem. So I think that's all I would like to say. And over to Anchalji. Thank you.
Thank you so much, Dr. Amitabh. And, as you rightly mentioned, I think, slowly and steadily the startups are coming out of that pandemic. Though, of course, the investment is slow. However, the deals are happening in the domains, different sectors. Like you said, of course, manufacturing is not being able to pushed properly. But I think there are investors who are keen to understand the manufacturing sector also. There are particularly consumer focused funds also. And at FundTQ, I personally believe that it is very important to connect, like you rightly said, connect the right dots, because most of the time startups even don't know that which are those investors particularly. And what happens is they go to some pool of investors, maybe 100 or 200 investors, and if they are not getting an answer from them, they, of course, they believe completely that their model is has a flaw, because they're not able to get invested, and that creates a demotivation also sometimes. And that then pushes the entrepreneurs to give up. And most of the time this happen because of lack of mentorship at most of the places. Of course, we believe that at IIT Kanpur, they are getting the best of the mentorship under you. However, talking about the entire country, we need to work together. And given that, we'll talk more about how FundTQ is helping the startups to reach to that particular level, and upgrade their entire existing ecosystem with technology. So I'll just quickly share my screen here so that we could understand more about it. The pattern would be, I'll quickly talk about the valuation methodologies, and what is the best way to what could be kept in mind while pitching to the investors, and then we can take it forward from there. So, introducing FundTQ, the digital funding assistance platform. This is the look of the platform that is there. And now we'll talk about how it helps. So we'll talk about the valuation in the early stage startups. Normally, what happens, people do not understand the relevance of uh, of valuing their company, and it is being researched that mostly 80% of the companies do not even value themselves. They go to investment bankers, they go to any, they either apply any mathematics. They do not have the exact valuation that what would be the valuation of the company. And it's not about the early stage startups. Even if you have heard about the video of Ritesh Agarwal, the founder of Oyo. In one of the interviews he said, I didn't know about the valuation at that time when I started, so I diluted double digit of the stake for merely $200,000, something like that amount. And now I understand the importance of valuation, that dilution should be in line with my valuation. And most of the times what happens is valuation is mostly driven by the investors, because investors know better than you. That is one. It is not because investors had that kind of leverage, but it is there that startups do not know their valuation, nor are they able to negotiate better, because when you do not know about your valuation, you are not able to negotiate better on the table. Also, investors love to hear from you. If you are justifying your projections, if you're justifying your valuation, they would love to hear from you, because ultimately the financial investor, they are they are mostly they want startups to talk about finance more. One of the quick trick that given that we had an event like Priyanka has mentioned, that FundTQ has organized an event in the month of September for startup fundraising, where 105 startups pitched live in front of 100 plus global investors, including SAP, Sequoia, Bloom, Jafco, JSW, and all the top early stage PCs and angel networks. And we realized during that time also the kind of learning we had. One is the pitches are normally very laid back. So when you're discussing about your pitch, it goes too much into the technicalities. You have to what I say is you have to match the bandwidth of the investor. It's just a financial investor. He might not know about the background of of the sector, or he might know about the background of the sector, but he's not interested in going too deep. Talk about the problem statement, and it should be generic, like Mr. Amitabha also suggested that it should not be too technical. And most of times it happens they lose interest. See, aapko agar if I take you to a lecture and it's so boring, there are so many movies that you watch. Some are boring, some are documentary, some are very interesting, some have learning also, and some are, and at the same time they're interesting also. So make your pitch different than other people, make it interesting, make it and obviously, about when you're talking to investors, talk more from and move your hand, etc. Your gesture, your personality should be good. And when talking to investor, talk confidently also, and talk something that you could connect to them, rather than you are pitching. If you're taking the same pitch everywhere every time, of course, after 5 or 6 pitches, what happens is you are just sitting like this and you'll pitch, and there will be no vibes that you could be able to share with the investor. And that is very important when it is a time consuming task. If somebody is going for fundraising, they have to understand it is a time consuming task. But the obviously, if you want to reap the fruits, you have to go beyond your comfort zone. You have to come out of your comfort zone. And also, it is very important to learn. There are a lot of material on YouTube. There are a lot of We also have a channel on YouTube, you can subscribe to that. But there are a lot of learning that how an effective pitch could happen. Most of it comes boils down to one thing, that you have to engage with the investors. Most of the times kya hota hai ki you do not even respond, you do not follow up with the investor. And if he's not replying, you stop sharing any kind of material. If you're connected to an investor, you share certain stuff, the update, the milestones that you're achieving with the investor. That is, of course, a very good way to tell them, because investors are also on a lookout. See, they have a lot of startups. They do not have just your startup. They get a lot of startup deals every day. So if you take an average of 50 startup deals every day they get, they do not have the time to focus on your startup venture only. They can choose between A and B. But for you, of course, an investor is very important. So it is very important for you to have a brand recall. Maybe you know you can create certain small videos. You can share it with them, or your milestone, or something which could be catchy. If you are in manufacturing, like Mr. Amitabha said, you can just gift your piece of material to an investor, where you feel that, okay, this is the investor I want on board. And choose your investors wisely. It should not be like going to everyone and everywhere. When you're going and you know that these are the focused investors, you can send your material piece to them and say that, why don't you try it? Like, if you're making manufacturing mask, why don't you give to your investor, just use it. So that's how you could have your brand value also. And most of the startup founders that I always say, they are not in media. Unka LinkedIn page is not that active. They do not go in webinars, etc. So it is not important. Most of the entrepreneurs are not, but it adds value to your venture, because you then become irreplaceable. That we have a video also, a very interesting and funny video that we created on our channel, where we say why couple of entrepreneurs are being sacked from their own companies. Like Microsoft is an example. You have an example of Uber latest. This founders are being forced to step down from their own companies, and it is because you become irreplaceable, so that you are a part and a face of your company, and a loyalty is attached to you, and that's why your company. so that you become an integral part. And that's how investors also like that you are an integral part of your company and you bring value. It's not like your own venture only brings value. So there are a couple of coming back to that this thing, that why is it relevant and why it is challenging to find the valuation. Adequate dilution, especially at the early stages, is a major concern, and it is very important that during the early stages you should not be that desperate to take money from the investors that you lose the direction, that okay, it doesn't matter diluting majority stake, so that the startup in itself becomes non-lucrative for the other round. Knowing your right worth, you should know that what is your right worth. It's your projection should not be that okay, I'll become a 30,000 crore company in 2 years. No company has become ever like that. You have to make your plan very realistic, so that investors also understand that you understand the market, you understand the financial terms, you understand that how much is optimistic and how much is you know rather realistic. So don't be optimistic or pessimistic, be realistic in finding your projections also. Then third challenge in the valuation is when you go to any normally going to any advisor, normally valuation runs into pages, a lot of sheets are there, so it is error prone. And until unless you have that kind of validation that okay, this valuation is perfect, you don't know that the valuation is perfect or not. And then you have a low confidence when you're not able to justify your numbers. So if you put random numbers in the valuation, see, you need to justify each and everything that you're putting in your financial plan. So if you're saying revenue after 3 years is this much, why is that this much, and is there a precedence, is there any other compete company which has achieved that? So you need to justify each and every cell of yours if you're doing it in Excel. Each and every financial plan input needs to be validated. There are a couple of globally renowned valuation methodologies that are there, like business valuation. There is relative valuation. So business valuation can be found out with three different methods. Relative valuation, as the name suggests, relative is related to other peer group company. So if you have a peer group company, maybe it's listed or it is unlisted, you can just take out, if it's unlisted, you can take out the transaction if something has happened in that transaction. So if you are in fintech and you're comparable to Paytm. So last Paytm transaction you can take out and you can find out the multiples, and you can adjust. We'll talk about the adjustment that you can make, you have to make rather. And similarly, if you're in net tech, you can compare with Byju's maybe, but you can say, okay, this is a different kind of model, but the target audience is same, or I can replace somewhere, I can replace couple of customers where Baiju is there, so you can compare it with the Baiju transaction. So that is called relative valuation. Now, what kind of valuation you have to find out? You have to find out some of the multiples. Multiples means that if the company share value, one share valued at 100 rupees maybe, and if the profit is 10 rupees, and of course you have to find out the multiple on profit also. So 100 divided by 10 becomes 10. So multiple of 10 on the profit, you can take, you can apply on your profit, and you can take on multiple on revenue also, because that's more prudent, because most of these startups do not have the profit, positive profit also, because they burn cash, they have to burn cash to grow. So you can find out on revenue basis. So you can find out, okay, if it is like if the company is valued at 100 crore in Indian rupee, and if the revenue is 100, then the multiple of 100 by 1 is 1 revenue, 1 times the revenue multiple you can also get on your company. If it is you're selling the majority stake, you can also have control premium. We'll talk about it further. There's then a P multiple ratio that is normally not used because of, again, the profitabilities in startup ecosystem is not, for at least 5 6 years, is not that much to find out this multiple, so it becomes a little irrelevant. Then there are operational metrics. So if you are a company in media domain or a social media or something like Instagram, you've made TikTok kind of thing, then of course you will get more revenue from the other sources like advertisement, selling the databases or doing some artificial intelligence and selling that kind of analysis of on your target audience, etc. So that becomes operational metrics, because if you say, 3 years I have to give it free of cost, I will not get any operational revenue. Like WhatsApp did not have any revenue when it got sold for about more than $20 billion to Facebook. It had subscribers, so it was valued based on subscribers. So you can take that multiple also if you're saying subscriber, but then it's in America, you are in India, you can adjust it based on the risk premium in India and America. So mostly you take 20% adjustment, and you can find out the multiple where you have to value yourself. Then second is asset valuation method. So majorly, like Mr. Amitabha said, manufacturing companies, especially in IIT Kanpur, they could be asset intensive. Maybe you have made a drone that is very capital intensive, or machineries. So you can take out an asset value of your company. That becomes cost of replacement also. That you can say, okay, same factory, if I have to set up today, what would be the value plus the business valuation. So apart from that, your machinery could be valued more than your business also. Then third is the cash flow method. So ultimately, financial investors only talking about the cash that you'll be generated. So generate cash, you can take discounted cash flow. There are two methods to find out discounted cash flow growth and discounted cash flow multiple method. We'll send after this, we have the entire methodology document which our platform uses to find out the valuation. We'll talk about it in detail about how the two softwares that we are bringing in picture resolves all these challenges in valuation and in fundraising also. So this is quickly about what you can adjust. You have comparable transaction method, comparable trading multiple, and then operation metrics like we talked about. And there are a lot of things. Concept of discount rate comes in DCF. There is, you have to make an entire business plan. Otherwise, also you have to make an entire business plan, and then you have to find out the present value of the foreseeable cash flow and the perpetuity period, because business is assumed to be going concern. So that's why a kind of perpetuity period comes into picture. Now here quickly I would like to add something that I tell to all the startups. Mostly startups that we build today in India, and I'm talking about international and in Indian market, most of the startups are totally focused on getting the valuation, getting the fundraising done, and they always forget about that what is the core business. See, fundraising is not your core business activity. You have to focus on your company, on getting customers, be closer to customers than being closer to investors. See, if you are profitable, if you are earning a lot of money, and if you're focused, see, we always say that good business models are created during the pandemic, during the crisis period only. So WhatsApp, you talk about Airbnb, etc., they're built in the crisis period, because then your mind uh, thinks about that what is the way to bring disruption during this period. And this is the right time, like Dr. Amitabha just suggested, it's the right time, it's a brilliant time to grow your startup, to focus on actually the venture, to go closer to your customers. So think about your customers. Fundraising ho jayegi. Fundraising, like Alibaba, I tell you, the Alibaba's founder Jack Ma's one quote: people should follow dreams, and funds will follow the people. Then don't feel that you are not getting funded. It is no milestone that you have to get funded. Bootstrap companies like Zerodha or Zoho, these companies are bootstrapped. They never took money from investors. So even if you want to take funding, but don't totally focus on your funding. क्या होता है कि most of the times you're just spending entire months thinking about the funding, talking to the investors and focusing already on the investment only. If you are focusing, if you know that okay, lack of resources, see, best business models are created based on the lack of resources. If you don't have resources, you'll find the best resources that fits in your kitty, in your budget. So find out best resources, give them the best exposure in your company, and you can bring co-founders, etc. also. But think about growing the company. If you do not have, see, my point, maybe I will just contradict with a couple of your opinion, but when the fundraising is a very new concept. I mean, it started in 2000, 2006 7. It The momentum came after the startup ecosystem momentum came. So of course India is the distant third in the entire global startup ecosystem. First is US, other is China, and India is of course distant third, because most of the times it happens that I'm so sorry, one second, that most of the times, uh, sorry, I just, hmm, I hope you can see my screen now. So most of the times it happens that so in the previous terms, अगर हम बात करें before 2000 arena, Dhirubhai Ambani, Reliance, and these all companies which were being developed, इनके पास कोई ऐसा fundraising mechanism नहीं था. Banks भी तब पैसे देते थे when you were earning some profits for them. So today, if you're not earning profits for them, they won't give you money. They won't ever lend money to you. तब भी projections के base पे पैसे मिलते थे. But think about this, कि अगर मेरे पास funding नहीं भी है, I can still create a big business model. It's just hard time till couple of months now. उतना runway if you have, if you can sustain that kind of runway, trust me, if you can do some wonders. This is one of the things that investors would now ask startups. What did you do during pandemic? What difference did you make during the pandemic? कि जब कोविड था, were you just sitting idle, or were you just creating something exemplary? Did you think about better ways to to go closer to your customers, better way to market your product? Because when you're sitting at home, what extra did you do apart from the other startups? And that is one of the metrics that startups investors would love to hear. So don't lose your heart. You're doing exemplary work. Everybody here, all the startups are wonderful here. The point is, stop focusing on this one thing. वैसे भी यही कहते हैं ना कि आप जब एक चीज पे बहुत ज्यादा फोकस करो, वो कभी नहीं मिलती, runs away from you. Focus on, stop reading कि क्या deals हो रही हैं market में, etc. Just focus on your business model. Trust me, if you focus on your business model, funding will follow you. This is one of the suggestions that I wanted to personally give it to you. Coming back to the valuation methodologies are there, how DCF is calculated, the complicated methodologies that we're talking about. So what has changed after COVID? Obviously, business models have become more, technology has become, so people are disrupting various business model using technology. Now, it is must to be closer to your customer. Slow down in access to capital, because most of the teams in the investor group are lean now. They're working on, smaller teams, and it is important that you should look out for alternative revenue sources. So आप ये कह सकते हैं, I can cross sell this, maybe I get money, maybe I can white label my solution, I can get money. So think about the better ways and alternative ways for revenue also. Then third is multiples. एंड इसका एक और चीज है, अगर मैं अज्यूम करूं कि मेरे आज अकाउंट में देयर इज 2 crore ऑफ मनी इन माय अकाउंट, व्हाट वुड बी द नेक्स्ट स्टेप आई वुड डू? डोंट थिंक अबाउट कि मुझे वो पैसा बर्न करना है. जस्ट थिंक अबाउट व्हाट इज द वे दैट आई नीड टू develop my business model. Ultimately, you have to make money for, after investment, you have to make money for yourself also, and for the investor also. Without investment, you have to make money for yourself. And trust me, customers are the best way to fund your business model. Coming back, multiples are impacted as listed securities now are cheaper. So normally investors would look out for cheaper securities. So अगर मैं Reliance का share अगर down है, I would prefer Reliance over any other startup, because yes, Reliance if invest in some of the startups, that can be done. Business model scenario. Whenever you are making business models, financial plan in the Excel, always make scenarios. कोविड किसी को नहीं पता था it would come, but always think about it कि if it can go worse also, and it can go optimistic way में, it can go up also. So think about both ways. Don't show just a rosy picture to investors, because investors know what is the realistic position. But always be realistic and make business model based on scenarios. People talk a lot about iSafe. So this was the last time when we were taking webinar, and they were asking about iSafe. iSafe is India's simple agreement for future equity. This presentation you will get after this session. So you can just refer. There is a link also there to just give you an uh, link to download the safe iSafe document, where you can just refer. iSafe is a concept जो US and international west से पूरा ये concept आया है. Y Combinator बहुत use करता है safe document. India में it's not much prevalent. Why I talk about that, and what is the benefit if you are signing iSafe with your investors? So iSafe is nothing but investment for a convertible instrument. So it's not upfront equity that you're giving. Today you might not know कि ठीक है, what is my valuation. I am not sure about it. So what I can do is, I will not value my shares today. You give me money. Let's say you give me $1 million, but I am saying that I will get my shares valued after 1 year of the period, when I will get a when I will go for raising the second tranche of funding, and uh, and you know so either you can go for it that okay, I will convert the preference shares, and it is like a CCPS. So it is like a compulsory convertible instrument, and on the occurrence of a specified event, it will be converted. So it is, of course, it has a preference over the equity shareholders. So if the company is liquidated, they will first pay your debt. Debt to hota hi nahi normally startups mein. It could be preference shares and then equity. Then normally startups at idea, MVP, or very early stage revenue, who cannot assign a valuation, they can they can assign valuation. Uh, s- then it's a 6-page agreement, and it's quick closure also. Why do they when do they convert? So क्या कोई event हो, for example, if I say revenue, if I reach a revenue of 10 crore, I will get a valuation done, and I will get your iSafe converted into equity shares. Sorry, one second. So I will convert it into the equity. Then next is the next valuation round. So कभी भी next valuation round होगा, maybe I sell my secondary shares, या कभी मैं strategic equity stake दे दूंगा, M&A करूंगा, या maximum 3 years की time limit होती है कि 3 years में you have to simply convert the iSafe into equity. अब यहाँ पर इट्स वेरी इजी फॉर स्टार्टअप्स टू गेट फंडिंग की ठीक है, अभी वैल्यूएशन का सिरदर्दी नहीं है, एंड वी कैन गेट इट ऑन फ्यूचर डेट. व्हाट इज द चैलेंज विद द इन्वेस्टर्स? इन्वेस्टर्स क्यों नहीं करना चाहते हैं? बिकॉज इंडिया में थोड़ा सा स्ट्रक्चर इज नॉट स्ट्रीमलाइंड. इट्स रिस्की. फर्स्ट तो इवन एंटरप्रेन्योर्स के लिए इट्स वेरी रिस्की. क्या होता है कि जब आप कन्वर्जन करने जाते हो, उस टाइम पे तो यू साइन द आई सेफ की ठीक है, आई विल जस्ट go ahead with this. But जब आप कन्वर्जन करने जाते हो, बहुत बार ऐसा होता है कि you do not even think about the clauses which were there in the iSafe, and when actual conversion happens, it goes beyond the expected. For example, अब कोविड आ गया एंड मैंने कहा 3 years मेरा इट्स गेटिंग कंप्लीटेड. कोविड में मेरा रेवेन्यू ही नहीं आया उतना. नाउ इन्वेस्टर विल से अब मेरा आप iSafe कन्वर्ट करो. सो इफ आई गेट इट कन्वर्टेड नाउ, तो मेरी dilution will be much more than my expectation. So so it is very important that you think about this. Then next round might not even happen. So next round maybe कि आज मैं बोलती हूँ कि the round is there. Next round maybe if you take iSafe, so it's very uncertain that next round might not happen. So आप कहो कि आज भी iSafe ले लेता हूँ, next round में भी iSafe ले लेते हैं, and that's how it happens. Then third is no interest. सो कोई इंटरेस्ट अक्रू नहीं होता. सो 3 years तक आपको विदाउट इंटरेस्ट एक इक्विटी मिल जाती है, एंड अनलेस यू गेट इट कन्वर्टेड, इट इज kind of a loss for an investor. Then VC normally in India have a term of 3 to 4 years. They have to exit the company. So normally they do not prefer it. So now we will talk about FundTQ platform. 1 second. I'll just quickly open my slide. Sorry. I'll just share my other screen. Then I can just give you. Yes. So what is FundTQ platform and why we are talking a lot about it? So FundTQ platform is a data driven intelligence platform. It's a very analytical platform that we've developed. So we are offering two softwares here. First is a platform for negotiation, which is using the valuation SaaS. Second is the fast track fundraising process. You have the access to 1,000+ strategic and financial investor. Most of the times what happens is startups, क्या होता है, whenever you go to an event or you go to an investment banker, normally क्या होता है, they would connect you to the investors which they are connected with. ऐसा कोई भी investment banker or advisor नहीं है who is connected to all the investors in the market. So you lose out to an opportunity to connect to other set of investors. So क्या होता है कि normally in the smaller deals, for example, till $1 million, nobody even cares, even if you're giving 4 5 6% of your success fee, they do not even bother to connect you क्योंकि इतनी छोटी deal का size होता है. They would prefer having a mm, deal size of $10 million and above. So क्या होता है, इतनी छोटी deal पे nobody works a lot, nobody puts a lot of brains, and क्या होता है कि startups normally lose out in that opportunity, and startups themselves start connecting with the investors. That ultimately unka the entire focus changes from their business model to their funding requirement. So we are coming there where you do not have to worry about your fundraising process. You just worry about your financial, the business model, and achieving your milestones. We will take care of your fundraising requirement, and you will get entire that kind of facilitation of fundraising which a larger ticket size will get. I tell you how. Then you have the rating and testimonials of the investors. Highly, it's very time effective and cost effective also. I'll just quickly now take you to the platform. This is our first platform. It's called Choose Right Investors platform. It's based on selection, shortlisting only. Not everybody, we are not giving access to everybody to use this platform because we have niche investors here. We'll soon open it to wider public. It's a data analytics and intelligent platform. What happens is it will connect you to 2,000+ global investor. If you see the mid one, you have the option to shortlist the investors based on their profile. So you will see the entire profile here of the investor, and you can pick and choose your own investors. If you say no, I want to go to these top 10, these are my priority. If these are not there, then this, then this. These are my ABC Pareto analysis, and I would like to go in that sequence. So you can choose, you can run your deal, and entire deal running is in your hands and without any inconvenience. Everything is there on the platform. You don't have to worry about kahan par ja raha hai profile, who will follow up. Everything is there on the platform. Then you can track the progress of your live deal. You have to worry कि अच्छा ठीक है इसके बाद क्या follow up. You will be getting a relationship manager also to take care of your deal progress. Presently, 105 deals are running on the platform. Couple of them manually and couple of them on the platform. Especially for the early stage technology and consumer deals, and especially वहाँ पर भी जहाँ पर आपको strategic deal, like you might not be able to connect to Amazon, or I feel that uh, you know Reliance could invest in my company, or Geo could invest in my company, and take it's a lot of time consuming task to manage the entire deals. Now you have the opportunity to connect with 2000 plus global investors based on your profile. So ऐसा नहीं है that we are giving all the investors. You will only be shortlisted based on your uh, your requirement. If you are, for example, you are in health tech, so it is very data driven platform. It applies all the analytics and proprietary algorithm to take out the investor pool for you. It is again cost effective, real time deal tracking, and data analytics inside of it. The complete platform view is there down, and we'll showcase the platform video at the end of this session. Then it is the second platform that we are offering is FundTQ valuation software. So sometimes it happens that these are the five investors I have to go, but you don't know what is the valuation of your company and how to take out that. And I do not have a good looking teaser pitch book also. What you can do is, with FundTQ valuation software, it captures the relevant details which investors actually want. It uses proprietary algorithm and data analytics to find out the valuation of your company. It's an estimate again. It's not the precise valuation which a valuer or a merchant banker can do, but it gives a estimate of your valuation, that it is, this could be the valuation. Also, one important point is, you will also get to know that for a particular capital requirement, what could be your estimated dilution. So बहुत बार ये पूछा जाता है कि कितना अच्छा dilute करोगे आप इतने capital requirement. Everything is captured on the teaser. So there is the output is, you will get a teaser, which is a comprehensive document. It's a two-page document, and beyond this, nobody at the early stage when you're pitching for it, rather than giving them pitch books running for like over pages, give them a small teaser. Otherwise, also give them a short, crisp teaser. If they're interested, they will look back into this, rather than giving them comprehensive pitch books जो उनको समझ ही नहीं आती बहुत भारी. It takes a lot of time to go through pitch books. We are suggesting them, give them a 1.5 page teaser which they would quickly understand. It's very user friendly and relatively easier to understand this, and they would know कि अच्छा what is the company in, and what do they do, and then if they are interested, they'll come back and ask for the pitch deck. So this valuation software we launched in February 2020 in IIT Delhi and IIT Madras and other entrepreneurs from IIM Ahmedabad and Bangalore. They're using this platform since February 2020. It has million of data points at the back end, which comes out because it uses trading multiples analysis, transaction multiple analysis in your domain to come out with these figures. These are from reliable sources, all the primary and the secondary data sources we have used, and it provides valuation in precisely 10 minutes. You just have to fill in 15 to 60, 15 to 16 data points, which includes your revenue, your cost, and couple of other things, which are very easy. And there are videos attached at every place to make you understand how valuations are done and what you should, uh, you know, take care in the valuation. It also talks about the total addressable market size when you're filling it. So if you fill it, you will become more learned and more, uh, you know, one second, let me try to open this teaser for you, and I can just quickly tell you that how it looks like. So this is the impact teaser. This is the output of the teaser, which gives that, okay, which stage you are in, how much committed capital, how many founders, this is a problem, USP, and this cool looking report you can send it to. So it about the founder, about the peer group if you select any listed companies here, your financial performance, your pre-money valuation, user funds, the ownership, past funding round, your methodology valuation, and your equity stake dilution. Then okay, for $1.3 million, the valuation is $59 million, and you can dilute between 1.9% to 2.6%. This range may you can dilute, and 2.2 is the average you can dilute. So आपको पता है कि for this I have to dilute this much of the stake, so that you can just quickly go through it. So it's a two-page teaser that the platform generates. This talks about the valuation methodology, somebody who is interested in knowing the valuation, or बहुत बारी ऐसा होता है कि the investors ask that what's the basis of your valuation. So it is a completely complete valuation document that is there, which talks about how the valuation is being driven, what kind of formulas are there on the back end, and what are the sources of the. This is the document which is available on the website also. So this is that how the valuation being driven and what kind of sources that we've used. It's complex methodologies. Everything is there at the back end. I'll just quickly show you the software link also. Talking about InvestTQ, the event that we've conducted, where 100 plus startups, even entrepreneurs from IIT Kanpur also pitched there. So there were 350 registration that we got, and only 100 startups that the panel shortlisted. The panel one judges shortlisted, pitched live in front of the investors, and it's India's biggest virtual fundraising event, especially during COVID when everybody was seeking for fund. And these were the snapshot of some of the participants which came. Sukhbir Singh, the celebrity investor, inaugurated the event also. And you know, with this, obviously, we got a success ratio of close to 60%, and most of the startups are now getting evaluated by investors, and investors are taking it forward with the startups. Sorry. Knowledge sharing session. We have our own YouTube channel where we talk a lot about the small concepts of valuation, talking about fundraising. We have our own magazine also. We launched in this year only, which talks about what investors look into startups, and it's getting closer. The startups are getting closer to investors now, and what kind of learning that whatever kind of what learning we are getting through other startups, especially in other sectors like edtech. We have articles also to talk about it. So these are some of the knowledge sharing sessions that we often do. I am Aanchal Malhotra. I'm the founder and CEO of FundTQ. We have offices across internationally in Dubai and across Indian market. We'll talk about your questions. I'll quickly show you the platform, that how the platform works and how it looks like. So it's a video here. Form, and I will talk about the other platform. This is the FundTQ valuation software that you will see here, that how to fill and take out the impact teaser out of it. Sorry. So this was about the platform, and more specific tutorial. Because of the lack of the time, we'll not take it here. The demo, we can send it a tutorial to you, and separately we can connect. So we would like to take your questions now. Thank you so much for being a part here, and so we can take questions. Can you hear me?
Yes, Anchal, you're audible. If any of you
So
have any,
you can share questions in the chat box, and we can take it forward from there. Hi, everybody here, participants, please share your questions in the chat box, and Priyanka can then take the questions from Mr. Amitabha or myself.
we will share the valuation document link with all of you after the event. We can email you all with the tutorial and the presentation.
Sure. Do we have any questions?
Not so far, so I think we can, if all of you have so we have another question now. They're asking if FundTQ also does smaller fundraising, for about $500,000.
So yes, so we are doing one of also there is one initiative, and we would love to have startups in that domain. We are working for an initiative, startups by specially abled entrepreneurs and transgender entrepreneurs, and we are doing it everything for free of cost, entire lifetime free advisory we are giving to them. So there is one startup who pitched during the event, and the ticket size was 60 lakh in Indian rupee. Also, we are working with them. So obviously the ticket size is not a matter for us. The platform is made especially for the early stage startups.
Okay. The next question that we have is, how long is the valuation report valid for?
So valuation report is, you can, it's normally the average transaction. Actually, every time transactions do not happen. So it is valid for you can take it as like 6 months period. And after 6 months period, of course, if there is a change in the multiples and the valuations, then you have to take it again. But the platform, when you take, so there are two kind of package here. Valuation is free of cost for any startup, but if you want a teaser and a report, proper dilution and everything has to be there, that is paid. For IIT Kanpur, we will separately share a code. We would like you to use it for at least for one use. We are giving it for free of cost. Also, we'll share the promo code separately in the email after this session, where founders from IIT Kanpur can use it, the valuation software. They can use it freely for 3 months period.
Another related question that has come up, Anshul, is that the valuation report is a machine-driven report, impact teaser, but usually investors ask for a report from a merchant or investment banker. So, what is
Uh, so no investors normally ask a valuation report. That is one thing. Uh, See, valuation is very subjective. Until unless you can just give it on an Excel sheet also, that this much transaction has happened in the past, and I feel my peer group is Paytm. Last transaction in Paytm happened in on this date, and that was valued at this much. My valuation needs to be this much. Valuation is always the conclusion of any deal. It's never the start of the deal. So if they like your model, they will deliberate on it. It's always dependent on negotiation. At one point you need to be confident on your valuation कि अच्छा, इससे beyond I will not go in the valuation term. uh,
Hello, hello.
Hello.
My name is Manoj Maurya. Hi, Achal. I have a
Hi.
question. This valuation report is the mandatory for regulatory purpose. It's not like we can take investment. If we take any investment, we have to submit a valuation report. So, is your valuation report is valid for these kind of regulatory compliances? This is one question. And another question, I just want to know the cost of valuation, the term sheet, and the connection. Means how you charge for any startup to do all these things. Thank you.
Sure, Manoj. Thank you for the question. So, couple of questions. Like you said once, of course, it's for the compliance sake. So, FundTQ, of course, I myself is a registered valuer, but today, presently, IBBI never allows the compliances to be done online right now because they want a valuer to have an understanding. But going forward, of course, we are bringing this feature. Right now, the feature is not applicable, but going forward, it will be there. Second is the cost that you are asking first. So, like I said, we have two softwares. One is for just completely valuation and getting the teaser done. So, it is called Valuation and Teaser Software, where you get the impact teaser. That is a two-page document of your company, and you can share instantly with your investors. Other is the choose right investors platform. Why we say choose right investor? Because it is made for the startups to choose their investors and manage the deals. The pricing etc will be shared separately over the email rather than giving it here. And so of course the promo code is applicable for valuation software, and otherwise the pricing is there on the website also for the use. We can share the pricing separately over the email.
Okay. Because to execute any investment, there must be a term sheet. So that also costs some. So you are also providing term sheet and all.
Yes, so
And
we're providing templates. So there are templates like so pitch book. So normally क्या होता है कि people do not know how to fill a pitch book, how to make a pitch book, and normally they go to a graphic designer, get a pitch book done. So what we have is you just have to download the template of the pitch deck.
after that pitch,
No,
suppose
I'm
if
coming to
any
that point.
investment.
I'm coming to
Yes.
that point. So you just have to download it, fill your details in the pitch deck, and upload it back. Financial model also, even the entire financial model is there on a click of a button. You just have to download, fill your details, and you know uh, upload it back. Term sheet, shareholder agreement templates you will get. However, if you need any advisory, we provide the advisory panel. We do not provide it ourselves because we are a tech company. We are not an advisory company, so we do not provide any kind of advisory. However, of course, there will be a relationship manager who will guide you further on this. But if you want a legal advisor, then we'll have a startup legal advisors network for you who work in a very cost effective way, and we have taken a lot of network advantage from that, and we give it at a very low price because we want startups to get a kind of all the facilities which large scale startups or the corporates get. That's the entire vision of ours.
Okay.
Another question actually is that how many startups have been funded using FundTQ software in India?
Sorry.
How many startups have been funded
Sure.
using the valuation software?
Sure. So I talk about the FundTQ platform. So prior to that, we were running an advisory, and we wanted to know that what kind of challenges which startups face. There we are running close to 10 plus deals, but they are the large deals, near to 400, 500 crore of deals. But specifically for the early stage startups, this is one of the kinds of platform, and we are saying that it's Asia's first digital funding assistance platform that we are bringing, and we are running 105 deals because we initiated this platform only in the month of August. Valuation software we launched in February. The fundraising platform we launched in September, and the 105 deals that we are talking about is running live on the platform itself, and every detail is there on the website also.
Thank you, Aanchal. So that's all the questions that we have for now. If the participants have any other questions, please let us know.
So you can unmute and ask your question if you have any questions. Otherwise, all the details will be sent to you on your email. Good. I think we are good to go.
Yeah, I think we're good. Thank you all. Thank you, Aanchal, for answering all the questions and providing your insights. Thank you, Professor Amitabh, as well, for your time and for your insights. I thank you to all the participants for their time and being here. All the details will be emailed to you after the webinar, and I hope it was a no, gave some knowledge from the webinar. Thank you.
Thanks. And Dr. Amitabha, I would personally like to thank you that you're doing such kind of brilliant job in, promoting the startup ecosystem in IIT Kanpur. And we believe together we can create history, and Indian startup ecosystem could grow better than the other economies. So you are on mute, sorry.
I would look forward to such collaboration. And for now, I would like to thank FundTQ and particularly Anchalji for taking your time out and organizing this event. Uh, I hope the attendees benefited from the insight that you shared, and maybe they will be interested in using the platform as well. I'm sure you will continue your conversation with Abhijit. And with that, let us wish our startups the best of luck and wrap up.
Thank you. All the best, all the founders, and you're doing a brilliant job. You will grow, and don't run after being a unicorn. Run after being an impacticon. That's the name of our company. Create an impact rather than just running after the valuations. Thank you so much.